Good morning. Welcome to Stock Market Today. It's Wednesday, January 15th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. A lot of the content for this show comes in that email, as well as daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities closed mixed on Tuesday as investors turn their attention to the start of earnings season. JP Morgan and Citi both beat expectations, while Wells Fargo missed estimates due to higher expenses. REITs, materials, and tech underperformed. Healthcare and energy were your sector leadership on the day. Treasuries were stronger with the curve flattening. The dollar was stronger against the yen and the euro. Gold closed down 40 basis points. WTI crude tacked on 30 basis points on the day. As we get to the desk this morning, futures are slightly lower as investors await the signing of the U.S.-China Phase 1 trade deal and additional fourth quarter earnings reports. Asian markets traded mostly lower overnight, and European markets are slightly lower this morning. Treasuries are stronger across the curve. The dollar is weaker against the yen and euro. Gold is up 50 basis points. WTI crude is adding 10 basis points today. As we look at the structure of the S&P 500, we pushed to a new high yesterday and then faded from record levels, just slightly lower on the day after pushing to an all-time high. Near-term support, 3150 to 3200. That has not changed. We're looking for resistance levels to form. Naturally, no resistance from a price perspective with the market at all-time highs. The RSI is in bullish ranges and Chaikin money flow is bullish. So the structure of the market remains the same. The uptrend is intact, confirmed by our indicators, continue to stay the course. Look at leading stocks in leading areas of the market, those stocks with very bullish and bullish Chaikin power gauge ratings. Turning now to our market in a minute. What are we talking about today in our note? Well, stocks churn near record highs as earnings season begins. All three major market ETFs have very bullish or bullish Chaikin power gauge ETF ratings within the context of their trends. Large cap growth starts the year as leadership, but sentiment does remain more greedy than fearful. Futures, as I said, do point to a slightly lower open here today. Taking a look at the major markets from a power bar perspective, you can see the mixed bag yesterday. Dow was up 7 basis points, 5 bulls to 6 bears there. The S&P 500 down slightly, 131 bulls to 61 bears in that group. The NASDAQ was an underperformer on the day, down nearly 40 basis points. Still a solid power bar ratio, though, 27 to 5 bulls to bears. Small caps buck the trend. They were an outperformer yesterday, 645 to 218 bulls to bears in the small cap group. Bonds uptick, sending yields lower, and according to the Chaikin power bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Let's take a look at our stock of the day now, and this is Applied Materials from the Semiconductor and Semiconductor Equipment Group. Closed at 62.35, up 87 basis points yesterday. Some nice outperformance there. AMAT has a very bullish Chaikin power gauge rating due to very strong earnings performance and very positive expert activity. Financials and technicals are middle of the road. 20 factors, however, rolled up, give us this very bullish rating for a stock that has a strong trend above the rising long-term trend line. Is in a strong industry group. You've heard me talk about semis for some time. Now, the ribbon at the bottom of the chart tells us where the rating is and has been. You can see we're on that very bullish rating. And the stock is an outperformer and has been an outperformer for the majority of the past 12 months. Overbought, oversold indicator heading higher after pretty much just touching an oversold condition on the most recent move lower, and Chaikin money flow is bullish. So AMAT is a nice trend. Just rounding out of an oversold position. AMAT looks interesting to me. I will note they are scheduled to report earnings on February 12th. But this is a strong trend. This is a leader. I mean, very bullish stock outperforming the market in a leading area of the market. Folks, these are the stocks we're looking for. Take a look at AMAT as a potentially bullish idea. Let's look at our sector tracker now. The movement of the major sectors over the last 5 days, and all but energy are positive, so that's an encouraging sign from a trend perspective. Tech at the top of the list. It's the largest weight in the S&P 500. It's been pretty much our favorite sector for a while now, and it continues to outperform. After that, though, A little bit of a defensive feel over the past 5 days. REITs, staples, and utilities rounding out the top 4 sectors from a performance standpoint over the last week of trading. Middle of the road, comms, healthcare materials, and fins. And then down below, industrials and discretionary still higher, and energy lower over the last 5 days. Energy continues to be an area where we're not ready yet. Other areas in the market that obviously are going to remain in focus this week: financials, with more banks earnings. Bank of America reporting earnings this morning. Healthcare going to be in focus with the JP Morgan Healthcare Conference taking place out on the West Coast. So expect a lot of news flow out of those two sectors. Healthcare did have a nice day yesterday. Taking a look at our industry in focus, speaking of technology, the NYSE Tech Services Group is where we'll be looking today. It's outperformed the S&P 500 over the past 6 months by just about 2.5%. And the power bar ratio, which looks at future potential, is very strong. 12 bullish or very bullish stocks within this ETF and 0 bearish or very bearish stock. And that earns it a rank of number 1 of the 21 subsectors that we look at here at Chaikin Analytics. Some of the indicative names there, 2 of which come to us from that strong semiconductor group. Intel has a very bullish Chaikin power gauge rating. Micron has a very bullish Chaikin power gauge rating. And then we turn to the services side, where Accenture has a very bullish Chaikin power gauge rating. So these are stocks, 3 of the 12 stocks with very bullish or bullish ratings that you might want to consider doing some more work on within this area of the market that is outperforming. And let's take a look. XNTK is the ETF that we're using to measure this group, and it does have a very bullish Chaikin power gauge ETF rating. There's that power bar ratio, and we're in a strong trend above a rising long-term trend line. Now, what we can see here is that after some middling performance through the fourth quarter, this group in December began to outperform. So we have a very bullish fund outperforming the market. It does have bullish money flow. Now, if you are an ETF trader and looking for opportunities to tactically add these ideas, we are closer to overbought than we are to oversold with the indicator moving higher. But when we're thinking about looking for ideas within the equity market, we talk about strong groups. This is a strong group. So you want to start to drill down on these 12 names. Look for the names that have very bullish and bullish power gauge ratings that are outperforming the market, and then ideally try to get them when they are oversold. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Still, like I said, a lot of news flow coming out of the JP Morgan Healthcare Conference. Perrigo, PRGO, came out with a positive pre-announcement, which sent the stock higher by 12.5%. INSEE, on Monday, they announced a collaboration, and that stock is continuing to move higher, up 5.67% on the day. APA, not a healthcare stock. However, it did catch a positive initiation at Susquehanna yesterday, sent the stock higher by nearly 5%. McKesson is a healthcare stock, and they raised guidance up nearly 5%, 4.89%, following a positive guidance raise. And Under Armour was stronger yesterday by over 4.5% as the apparel and footwear stocks had a nice day yesterday. On the loser side of the board, Boston Sci, negative pre-announcement. A lot of these companies will pre-announce ahead of their presentation at these investor conferences, and that's what we're seeing here. Boston Sci down 6%, has a bearish Chaikin power gauge rating. Wells Fargo was their earnings announcement. Remember, JP Morgan and Citi beat expectations, but Wells Fargo missed, down 5.35%. Sell-side note sent Martin Marietta, MLM, down by 4% on the day. Align, seeing some competition entering the wholesale channel, down 3.5%. And AOS, sell-side note sent that stock lower by 2.7% on the day. Let's look at the chart now. On Wednesdays, we look at sentiment in the marketplace to get a gauge for if sentiment is a tailwind or a potential headwind. And, sentiment remains a headwind. We're overly bullish here. Taking a look at the 13-day moving average of the CBOE equity options put-call ratio, you can see the put-call ratio has declined further. We had a brief blip last week following the increased tensions in the Middle East. However, we've resumed moving to the downside. So investors do remain more greedy than fearful. We've kind of highlighted these levels where over the past few years, when breached, the market is, become a little bit choppy. I mean, is this a sign to go out and sell your stocks? No, that's not the call here. But the sign is to just be aware of where sentiment is throughout the market cycle and where it is within the context of the trend for the equity market. Markets at all-time highs and investors are more greedy than fearful. We can also see that in the VIX. Take a look in the middle of the chart here. The VIX is back below 13 after a brief spike last week on those U.S.-Iran tensions. So VIX not signaling fear in the marketplace, right? If anything, we're continuing to trend lower in the chart. I give our investors in our note, I give our investors a regression line, and we are below that declining regression line. I would also point out that the CNN Fear Greed Index is back at 90 and remaining in a position of extreme greed. So sentiment, just the way I see it is it's not a tailwind for you, right? It's not a tailwind the way it was back here in the August-September timeframe, and even in the October timeframe where investors were more fearful than greedy. Now we're more greedy than fearful. Do you run out and sell your stocks? No. Do you continue to manage risk? Yes. Stocks have been rising. If you've had some winners, raise your stops, manage your risk, following whatever process you use to manage your risk. But don't let your risk management slip just because the market is continuing to trend higher. Continue to follow your process. Continue to manage risk while looking for bullish and very bullish stocks in leading areas of the market. And one of the leading areas of the market to start the year is large cap growth. Taking a look at the Vanguard Russell 1000 Growth ETF, VONG, the ticker symbol here, you can see a nice steady uptrend over the past 12 months. Now, we did have a little bit of a, for you candlestick folks, that's a shooting star up there after pushing to a new high. But we are on a nice uptrend above a rising 200-day moving average, and a move that is confirmed by momentum is the RSI. Take a look at the RSI here. Series of higher lows and has now become overbought. So momentum confirming the trend higher in the near term for VONG, which has a bullish ETF power gauge rating, has 110 bullish or very bullish stocks as holdings within the fund for only 71 bearish or very bearish stocks. So remember, we talk, there are different areas in the market. You could look at sectors the way we do. You could look at growth and value, which we do often, right? You could look at large cap versus small cap and then start to triangulate that into where are the strongest areas in the market. Right now, what I would say is the strongest areas of the market are large cap, growth coming on strong. We've talked about tech. We talked about comm services yesterday. Take a look at this chart here. What I'm looking at is the past 20-day sector performance for the major sectors of the S&P 500, and look at where the strength is. Comm services and technology, right? So these are large caps, right? These are the S&P 500 sectors, right? These are the growthier areas of the market. So as you start to triangulate that, you know where you want to be looking for ideas. At the same time, you can start to hone in on the areas that you want to avoid, areas like materials, areas like energy, areas like consumer staples, right? Financials have come off of late. They're still bullish within Chaikin Analytics, but this is what we're talking about when we're saying focus on the leading areas of the market and then drill down on those areas to find bullish and very bullish stocks. Now, how are you going to find very bullish and bullish stocks? Well, what we're going to offer up here is take a test drive of Chaikin Analytics. For the first time, we are offering 14-day trials to Chaikin Analytics. If you head over to chaikinanalytics.com/test drive, you can sign up for a free 14-day trial. You can start to hone in on those leading areas and those leading stocks. You'll get access to my morning note as well as to the weekly calls that we host for our clients. So take a look, chaikinanalytics.com/test drive for a free 14-day trial to Chaikin Analytics. I hope you all have a great Wednesday. I will be back here tomorrow running through what I think are the important elements of the market that you should be focused on as earnings season continues. Have a great day, everyone.